Hi there, traders. This is the weekend wrap. Let's go over what has occurred this week and what we have heading into the new one. We'll go over the majors and maybe a few of the more exotics. Let's take a look first off at the Euro USD. And I want to point out that all these charts are available on the blog, so you can take a look at them there if you'd like. First off, the Euro USD is basically still in this consolidation zone that we have spoken about that has been in since the beginning of the month. And that's basically between 137.40 and 134.75. And if we want to get a little more specific, except for this spike up higher that happened right after Christmas, the pair has basically been in this 138.20 range. But what we're going to watch right now, right here, as you can see that the pair broke out of this ascending trend line, but we're not getting much traction at that point. So any move up towards this 137.40 level, there is a good chance that we find sellers at that point. But if we do get a break right above it, we have this ascending trend line. And this is not just any trend line. We have to go on a weekly chart, go back 5 years, and you can see that this trend line is still in play. This goes all the way back to 2008 from the high that occurred around 160, and you can see that the pair has bounced off this a few times. So we'll have to see if we get a push higher, if we get a break or hold at that level. So at the moment, right here, right now, you can see in this cross, we just basically are waiting. I'm waiting for a break of the 137.40 or the 134.75. Not going to sit around and play in this chop zone that we have going on so far this year. This is nice trend break, but you can see until we get above 137.40, I'm not really interested. And even at that point, I don't know if it would be risk reward to be worth it for a push at the push where we're going to hit major support at 139. So I would favor a push down to the downside, but we'll have to see how that plays out. Let's take a look at the Great Britain USD. This is the most interesting pair of the week. You can see we had a pretty marked move. We had upward days actually. 1, 2, 3, 4, 5, 6, 7, and on the 7th day, we broke the range. At least we'll see if we close here. But it looks like there's a good chance we're going to get a break of this 166.70, 166 level, and if we get a close above that point, then we're off to finally getting out of this consolidation zone that this pair has been in all the way since December, the beginning of December. And we'll have to see. Let's take a look actually on a larger chart. Where will that leave us? I haven't even looked at this yet. I guess we have another set of resistance right above here at 167.43, basically right where the cross is right now. And then you can see we've had a few spikes up towards the 168, 170 level, but neither here nor there. I'm more excited that we're out of this zone. So now it gives us an opportunity to try to get into the pair for an upward move. An upward move in the new resistance, if we get a close above this, will be that 166.70 level. The end of the day will be the key to this trade. The Aussie USD has been a interesting pair. There was a harmonic setup and nice trendline support initially at this 90.30 level. The pair spiked down lower, and now we're right back around that 90.30 level. But we are above this trend line, and at this point, that trend line doesn't really mean anything. So basically, at this point, as long as the pair, we need to see a break of 90 to really end the cycle of having, we can see lower highs and lower lows. And if we get a break of this 90 level, that would definitely be the end of that. But in the meantime, until that occurs, we can see that on a broader picture, well, you can't see it right here, the pair is on the downward trend. We can see we moved up, hit the 50 fib, and when I'm looking, as long as we remain below this level, is for a push down to the 83.80 level, which is the 0.272 fib in the shorter term. Let's take it to New Zealand. This pair has become a bore. Actually, it's had a pretty decent move. We broke this trend line. Let's jump down on a 4-hour chart. We'll get the last 20 days. You can see we had this ascending trend line right here. The pair managed to break above it, and now the cross is moving slower, gradually but surely. And it's up about 130 pips from this break, because what you would actually want to play is the break, but then the pull back to it right around the 82.12 level. First major level of resistance here is up 84, but if we look on the bigger chart, I'll go to last 6 months, you can see that this baby has just been sitting in a range between 84 and 80.50, just bouncing around in that range. If we get a break of the 84 level, that would be a little bit a little bit of a confirmation that we could be out of this and we could start seeing a move to the upside but I would be watching for any sort of reversal signal here around this level. Would give us an opportunity to go back toward ride the pair back down lower. The USDJPY, you can see that this pair has basically become range bound between 103, 103.50, and 101 and 101.60. It has been sitting in there since the 24th of last month, and it is somewhat still channeling lower, making lower lows, lower highs, just what we just said. So what I'm going to be watching in this pair is to see what we get here. We see we had the bounce off the 50 fib, could favor a push back up towards the 105, above the 105, I think up to the 108 level, 107.84 level, just like the Aussie, but you have to hold this 101, 101.60 level. So we'll see what happens in that cross. But at the moment, as long as we stay above this level, I would favor a continued push higher. I can take a look at the. Let's take a look at the Swiss franc. Swiss franc was in a triangle. Talked about that yesterday to the keen traders. And what we were looking for was a break of that triangle to the top side. To the top side, we would have had a nice break in the 90-20 level. Then we would have had an opportunity to ride the pair higher. First target would be 91.50 and so forth. Unfortunately, we had a break to the downside. And on the downside, I stated I wanted to see a break of the 89 level before I'd be interested in jumping into this cross, just because we have short-term support right there, and we also didn't see any momentum. And even if we had broken the 89 level, it's still difficult because there's a lot of support zones scattered right there on the bottom of the zone. So it's a break to the top is what I was interested in. And you can see basically this pair has just been drifting sideways in a slow wander, similar to the EURUSD. So far this year, we haven't been able to find any trends in either direction. So it's been kind of quiet, and a lot of participants have been just sitting on the sideline waiting for an opportunity to get into a broader move. Fire trades did pretty good this week. Well, we had a few break evens in the Great Britain JPY and long. The Great Britain Oz right now doing pretty well on that, up to the up about 80 pips. Looking and move to break even, looking for a continued move at that point. All right, you sign up today. You can get all the trade. You can get access to the educational videos about the different strategies I use, and of course, you get the Keen Fever. You get access to the trades I look at, and then education about the fire trades and stacker trades and so forth. All right, everybody, good weekend. See you guys on Monday.